In this video, we'll cover many of the opportunities for investing in gold. Bullions, bars, and coins. This is perhaps the best known form of direct gold ownership. Gold bullion is any form of pure or nearly pure gold that has been certified for its weight and purity. That includes coins, bars, sort of rounds, etc. of any size. A serial number is commonly attached to gold bars as well for security purposes. You can put gold in your self-directed IRA or directly possess that gold and have it shipped to you. Just note that only a specific set of gold bars, bullions, and coins are accepted in your IRA. You can't get all your gold jewelry and put it in your IRA. Gold has to have a 99.9% fineness to qualify for your IRA. This generally means that they must be produced by a COMEX-approved refinery or a national government mint. When you buy from Noble Gold, we can certify that what you'll have will be certified and eligible to go into an IRA. The second thing you can do is you can do gold ETFs or gold mutual funds. One alternative to a direct purchase of gold bullion is to invest in one of the gold-based exchange-traded funds or ETFs. Each share of these specialized instruments represents a fixed amount of gold, such as 1/10 of an ounce. These funds may be purchased or sold just like stocks in any brokerage or IRA account. The annual average expense ratios of these funds often are around 0.65%, much less than the fees and expenses of many other investments, including most mutual funds. Many mutual funds own gold bullion and gold companies as part of their normal portfolios, but investors should be aware that only a few mutual funds focus solely on gold investing. Most own a number of other commodities. Gold-only mutual funds are low cost and low minimum investment requirements and can be a diversification among many different companies. Some funds invest in the indexes of mining companies, others are tied directly to the gold price, while others are still actively managed. A third way you can acquire gold is gold futures and options. Futures are contracts to buy or sell a given amount of an item, in this case gold, on a particular date in the future. Futures are traded in contracts, not shares, and represent a predetermined amount of gold. As this amount can be large, futures are more suitable for experienced investors. People often use futures because the commissions are very low and the margin requirements are much lower than traditional equity investments. Some contracts settle in dollars while others settle in gold, so investors may pay attention to the contract specifications to avoid having to take delivery of 100 ounces of gold on the settlement date. The fourth way is gold mining companies. Buying stocks of companies that specialize in mining and refining will also profit from a rising gold price. Investing in these types of companies can be an effective way to profit from gold and also carry lower risks than some other investment options. The largest gold mining companies boast extensive global operations, therefore, business factors common to many other larger companies play into the success of this investment. Fifth way you can buy gold is gold jewelry. Buying jewelry at retail prices involves a substantial markup. There are some companies charging 400% over the underlying value of the gold because you're paying for a brand or name of a company. As an investment, we discourage this. The idea for jewelry is to have it is to enjoy it, and it's not good for an investment. It's a naive investment. There's too much of a spread between the price of most jewelry and its gold value for it to be considered a true investment. But if you want to buy gold jewelry just as an accessory, because you want to wear it, go ahead. But it's not great as an investment. Bottom line, larger investors wishing to have direct exposure to price of gold may prefer to invest in gold directly by putting some of their IRA or actually physically possessing gold. There's also a level of comfort found in owning a physical asset instead of simply buying a piece of paper. The downside is a slight premium to the value of gold paid on the initial purchase, as well as you do have storage costs if you have it in a depository.